Hello and welcome to FX Street Currencies in Play, brought to you by Royal Financial Trading. I'm joined by Ryan Littlestone, who's an FX strategist. How are you today, Ryan?
Very good, Zach. A very good morning to you.
Good morning to you. We were just discussing earlier on major breaks in currency, so it's not a dull summer,
No.
despite what people are saying. But let's have a look at the headlines. Euro dollar trending near highs post last week's tapering comments. Bit of a drift from the highest levels. We just have a look at that on the intraday chart if we can. So up to, what was it up to? 114.75, 114.80?
Yeah, still not really. We're holding on to the break above 113, but we're still not confirming a push up. I want to see a real big push above 115, but we're still finding these high levels into the 114s tough, and that keeps the bears or keeps the shorts, gives them some hope. But while we maintain above 113.80, then it's looking strong still.
Is it really the dollar's weakness as much as anything else, or is this the euro got its
Still a bit of both, really. I mean, the proverbial cat got put amongst the pigeons with Draghi supposedly going to be turning up at Jackson Hole to part forth his wisdom, and the market's drawing a lot of things into that may or may not happen. But a bit of both, a bit dollar weakness and belief in the euro.
Right, okay, we've got dollar yen lower on Friday's data and dovish Fed speak. Is that a bit of a mess at the moment?
It's looking like it. I mean, it was in my mind it was always going to happen. Any sort of miss on the inflation and retail sales last week, and the dollar was going to get crunched on that. There was very little reason why it would go up unless inflation really did beat. We've heard from the Fed members, they're all starting to get a little twitchy over inflation. And when you get a data print 5 minutes later confirming that inflation's lower, now you see what happens to the dollar, and off it goes.
So what's going to happen? We're waiting for a next leg down like that, something in the next couple of days?
Yeah, well, the fact that it's struggling to get back up there, we can see 112.70, 75. That area is not getting past, and that keeps the bearishness in place. And it's going to take a lot to turn this around.
Okay, let's go on to cable, which has defied the experts, obviously not us, in breaking 130. What's your call here? Again, you've had the break now, so it's like, what do you do now?
Yeah, and we're very much in that. We were up to 131 late last night, as Asia opened, and early this morning. Again, it's taken advantage of the dollar weakness, and old Betty doesn't need that much of an excuse to rip people's faces off, and thus she did. But we've got to maintain that break, and we can see we're sitting on support around that 130.70 level. Get under there, and you're going to have some minor levels perhaps that need to develop, but if it does break below that 130.70 level properly, then we could be retracing a lot of that move down to 130, and that's about where I expect support to start coming in.
But you sort of imagine that having cleaned people out who were short against 130, they're not really going to be let off the hook, are they?
No, but then
for a market to do that. No,
that's right. So now everyone will probably start getting short at 131, and they may be in the money at the moment, but we're not straying too far. And if it does break 131 again, then off it goes higher, and more faces get ripped.
Okay, let's go on. Trade of the day, market's fairly quiet this morning. Most instruments trading in a narrow range. The pound dollar is very close to a break below the 130.70 level after the major rally. Breaking below will send the market even lower towards 130.30, the next line of support, which ties in with what you've been saying, Ryan. Sell pound dollar at 130.60, take profit at 130.30, and stop loss 130.75. Risk to reward ratio at 2. So a quick grab of points just below.
Yes, it's a pretty sensible trade. We've just highlighted the 130.60 level. That's where, or 130.70. So if we do get below that and then 130.60, then you've got a good trade potentially for a short. Particularly if we get a test of that 130.60 level and it holds, then you've got confirmation of the break lower, and ride it for what it's worth.
Okay, well, let's go along to the trading positions. Most people short of the big three, or the top three at least. Long rather, of the top three. Yeah. Which is a relief, I suppose, given I suppose not in the case of dollar yen. So dollar yen, people have been caught out there.
Yeah, very much so. And it only takes one incident, and the CPI did it, and people offside. But then you look at dollar CAD, and they've been riding that. They were 100%, a couple of weeks ago. So that's a nice ride, and that switch now probably shows that a lot of people are thinking that's a nice big move, we'll take some profit there. But then, you know, people are still short in Aussie dollar, and that's on a one-way ticket.
How's that going to pan out?
Well, we'll have to see where those figures move as people try to chase the trades.
But we had that's the thing. I think Friday was that Friday lunchtime was a pivotal time for currencies. I mean, that could be one for the next month or so, couldn't it?
Yeah, that's right. That's right. So, you know, and unfortunately, retail traders have a habit of chasing too late. So you need to sit back, wait for the levels, wait for dip to buy if you want to go long, and sell against the big resistance levels. But just jumping to try and catch a trend after it's happened, or big move after it's happened, is not good news.
Okay. Just finally, euro sterling. Thought it might be worth if we can get that on the screen here. Broke the 88, which I think was holding for quite a while.
Yeah.
And now we're sort of marooned around 87.50, 60. Is that going to find a base here? This is more tricky, isn't it?
Yeah, it is. I mean, you can see, you know, sometimes with euro sterling, you get some decent levels, especially intraday. You know, it's not a fast big market mover. It has the odd moment, but there you can see quite clearly up to 88, 88.20. You know, we've got a decent level of resistance, and same as support, you know, down to that 87.45, 40 level. So while you're in that range, then it's easy to go into the smaller time frames, pick those intraday support and resistance levels, and just job it in between, you know, 5-10 pips a time.
Okay. Finally, the economic calendar. Not sure whether we'll be staying up for this one. I'm sure you will, Ryan, because this is your area, obviously.
Yeah, my area of expertise, New Zealand
Exactly.
consumer prices. But again, it's inflation. You know, that's what the world's talking about now, as we've seen with the Fed. So equally in New Zealand, we'll see how important it is later on tonight.
But even this cross has been moving around a lot, isn't it? I mean, it's just I think Thursday was a bumper day for it.
Yeah, we've seen a lot of these moves now. You know, it naturally happens. You have a big, long consolidation period, and then all of a sudden we start to see some breaks. But you've got to look for that confirmation when you get a big break in a move.
I mean, what I was hinting at is, you know, with the indices so dull,
yeah,
the stock market's so dull, maybe that the FX is for people who want to trade away day and night. This is the area to be in.
Well, it's definitely not selling May go away this year, is it, so far?
Okay, well, Ryan Littlestone, FX strategist, thank you very much for coming in today. That's it for FX Street Currencies in Play, brought to you by Royal Financial Trading.